Hello and welcome to the weekly market updates from ICM.com. So we're going to start with the key movers for the past week and then go over some of the major economic events for the week to come. And after that, we're going to go to the MetaTrader 4 platform and do some technical analysis over some of the major currency pairs and commodities and Dow Jones. So first, let's start with the key movers. COVID-19 remains one of the key movers of the market and its implications on the economic recovery. We started seeing some pullback in economic indicators in July due to the spread or the continuous spread in the of the coronavirus, especially in the United States. So investors are a bit afraid that the continuous spread could weigh on the economic on the pace of the economic recovery, and definitely this is weighing on sentiment. So the cases are above 21 million currently, and the recovered cases are above 13.5 million, around this number, between 13.5 million and 14 million. As per the Johns Hopkins University. Also, last week we witnessed a series of economic indicators from the United Kingdom. Among them, the most important was the reading of the second quarter GDP, which showed that the economy contracted for almost above 20%, which was better than forecast of 22%, but still it is a very sharp decline and contraction in growth. But the hopes remain that if the United Kingdom will keep the virus under control, this could support a fast and healthy recovery. The British pound is still trading inside a consolidation zone. We're going to talk about it when we move to the technical part. The Reserve Bank of New Zealand had its monetary policy meeting also last week. The bank kept interest rates unchanged at 0.25%, their lowest level on record, but expanded the asset purchases program, the LSAP, to 100 billion New Zealand dollars, and they're trying to keep aside a series of tools and negotiations, among them the negative interest rates. So the bank is actively studying and preparing for further monetary policy easing measures if there are some headwinds to the recovery. So this weighed a little bit on the New Zealand dollar, and we've seen the New Zealand dollar retreating during the past week. So this is from the Reserve Bank of New Zealand. From Australia, we had the jobs report. It was a strong reading. We had a strong reading where the unemployment rate fell sharply. And the employment change was also significantly up. Also, this was translated a little bit into positivity into the Australian dollar, despite what we've hearing from Australia on the recent outbreaks. So this is still supporting the Australian dollar relative to other currencies. The US economic data were a bit mixed last week, but still they're a bit positive, especially the initial jobless claims, which rose less than 1 million the past week, the weakest rise or the weakest addition since the outbreak in early March. So this was one of the signs that the labor market could be recovering in the United States. However, the continuous spread there is weighing on sentiment for the economic recovery, and this was clear in some speeches from top Federal Reserve officials. So this is from the United States. Also, we had the US-China trade talks review delay. They were supposed to happen on Saturday, on August 15th. However, there was a delay for this for the trade talks. And a while ago, also Pompeo, he tweeted about Huawei. They are trying their best. So the Trump administration is trying its best to limit Huawei's exposure in the United States, and also recently TikTok and WeChat. So this is on the US-China trade tensions part, but also there were some comments, especially from Wilbur Ross, the US Commerce Secretary. He said that China continued to buy agricultural products from the United States and kept its word. So this could ease the tensions a little bit. However, this remains a key topic, especially ahead of the coming US elections. So these were the key movers for the past couple of days. Let's move now to highlight the top economic events to come later this week. So we'll start early tomorrow from Australia with the minutes of the last monetary policy meeting. So but back then in this meeting, the bank sounded a little bit dovish, especially while hinting to the recent outbreak. So this could have some impact on the market. Moving to the United States, we have the building permits and the housing starts. Both of them, there is a bit of rise in July versus June, so 1.258 in June, expectations of 1.32, 1.320,000 in July. Also for housing starts, 1.24 million. And then we have the weekly American Petroleum weekly crude oil stock, which showed a decline of almost 4.4 million barrels last week. And after that, we have from New Zealand the PPI input quarter on quarter for the second quarter. So any positive or better than expected reading could have some positivity on the New Zealand dollar. However, this is for the second quarter, the full second quarter, where the outbreak was at its most in New Zealand. Moving to Wednesday, we start with the United Kingdom, the inflation figures. We have the CPI expectations of a drop by 0.1%. Also, there is a PPI input, a little bit of an improvement, 1.1% to change. However, in July, the reading was 2.4%. Moving to the Eurozone, also the consumer price index for June, expectations of a decline by 0.3%, and also the Canadian consumer price index expectations of a rise by 0.4%. And after that, we have the weekly oil report by US Energy Information Administration, which showed a contraction or a decline in inventories by around 4.5 million barrels during last week. And one of the important events of the week will be the release of the minutes of the last monetary policy meeting by the Federal Reserve. So this could have an impact on the market. So stay tuned for this event. On Thursday, we start with the German producer price index, expectations of a rise by 0.1%, and then we have also the minutes of the last monetary policy meeting by the European Central Bank. So watch out for any terms on the monetary policy. Initial jobless claims, expectations of a rise by only to 925,000. Last week it was 963,000. So last week's release, it was for the week ending almost for the first week of August. Also, we have from Philadelphia the Philly Fed manufacturing index, expectations of a rise of a drop towards to 21.0 from 24.1 in July. So this is for Thursday. Moving to Friday, it's a bit busy on the day on Friday, especially with the PMIs. We're going to talk about the PMIs now, but first we have the United Kingdom retail sales figures, expectations of an expansion in retail sales by 2.3% in July versus 13.9% back in June. The Eurozone manufacturing PMI, definitely we have ahead of the Eurozone, we have the France and the French manufacturing and services PMI, in addition to the German manufacturing and services PMI. So also focus on these two, especially German figures, in order to track the recovery in Germany, one of the top economies in the region. And then we have the Eurozone, the whole manufacturing PMI, expectations of a rise to 52.9 from 51.8. Also services, while services, a little bit of disappointment towards 54.5 from 54.7, so not much of a change in services, but the one for manufacturing is a bit significant. Moving to the United Kingdom, also manufacturing PMI and services PMI, a bit of improvement in both sectors. After that, we have moving to North America, we have from Canada the retail sales figures, the June reading and not the July reading, so that's why we can witness difference between the figures from the United Kingdom and Canada. The United Kingdom are for July, and in United Kingdom back in June, the reading was around 13.9%. So that's why also the expectations for the Canadian retail sales in June to be near 25%. After that, we have also the manufacturing and services PMI, the market reading from the United States, expectations of a rise to 51.9 manufacturing and 51 in services. And after that, we have the existing home sales from the United States, expectations of a rise to 5.38 million in July versus 4.72 million in June. And we end the week with the Eurozone consumer confidence, which is expected to remain near negative 15 in August. So these are the top economic events to watch out for this week. Let's move to the MetaTrader 4 platform to talk about the key, about some of the top currency pairs, and let's start with, so we're going to start first with the euro dollar. We've been witnessing a little bit of a pullback, or a bit of range trading in most of the currencies against the US dollar due to the lack of key movers. So if you can see the weekly chart, we're still trading inside the range of the prior week. So we weren't able to go above it or below it during the past week. So watch out for these two levels. And if you go for the daily chart, also you can witness that we've been trading between this tight range between the support and resistance. So let's add some of the key economic indicators. So we're stuck inside this consolidation zone. So watch out for any break above it or below it. On the weekly chart, the prices are still near the upper band, but moving a little bit deeper to the inside. The RSI is near 70 level. On the daily chart, we can see that the bands, they converge to each other. The price is found support near the 20 simple moving average, which is the middle band of the Bollinger Band, and we're trading near the upper zone. So watch out for these two levels if you are trading the euro dollar from the above 119.15 and below 117. So we have this 200 pip range. As we go closer on the time frames, you can see we can see the consolidation trading or the sideways trading. It's clearer. We can see here that the price has found support near the 100 H4 exponential moving average. If we go for the hourly chart, we can see that also it's much clearer for the sideways move on this side, and the price has recently found its support near the 200-hour exponential moving average ahead of this move higher earlier today. So this is for the euro dollar. Let's just go for setting bigger levels if you are trading this pair. So in addition to the clear support and resistance zone, which are the recent lows and the past 2 weeks and the recent highs, you can also set the previous stop near 1490 as a key support zone in case we succeeded in trading below 1690 anytime this week or later this month. And on the upper side, we can go back towards 120 psychological level, 119.90 almost, which was the highest in almost May 2018 before continuing lower. So these are the key levels if you are trading the euro dollar. Also, we can pinpoint one additional level on the upside, which was resistance at 2 key times, and here it acted a little bit as a support, which comes around 2087. So these are the key levels if you are trading the euro dollar. Support 1, 1690, support 2, 1490, and on the upside, resistance 1 near 1910, and resistance to near 1995, 120 psychological level, and resistance 3 near 2087. This is for the pound. Moving to this is for the euro. Moving to the pound, we can see also that on the weekly chart, it is much clearer that the pair found resistance near the trend line, joining the key two tops since February 2018, and we're still trading below it. If we go deeper to the daily chart, we can see a clear consolidation zone after a surge, a sharp rally to the upside. So we're trading inside this consolidation zone, similarly to the euro dollar, awaiting some fresh fundamental drivers. Also 200 pip range, almost between 2970 and 3180. These are the key levels. If we're gonna go to if we just add some of the indicators, we can see that we can clearly see that the price is going sideways and approaching the 20 simple moving average. On the upside, if you want to set some targets using the Bollinger Band, the upper side of the Bollinger Band is near 132, so slightly above the previous high, and definitely near the previous resistance levels reached during February and January. Also, you can go a little bit closer, you can see it is much clearer of a move sideways, and on the hourly chart, you can see that every dip below the 200 bounced to the upside or founded buyers, and the prices bounced to the upside. So let's just highlight some of the key levels other than the ones so we have 130, 180, 132 level almost, and on the bottom 129.70. Additional resistance is near the top reached in on the 31st of December near 32.85, and on the downside we can go a little bit deeper towards 28.15. So these are the key levels if you are trading a British pound against the US dollar. Moving to the dollar yen, we're still trading inside a certain channel On the weekly chart, you can see a little bit of a reversal earlier today to last week's price action. On the daily chart, it is clear on Friday we had a move down, a bearish engulfing candle, erasing all the positive gains earned during Wednesday and on Thursday, and this sell-off continued. If we get deeper, so we can see that we're still trading inside this channel. So watch out the zones of this channel, especially on the upside. There was also, if we go closer here, we had a trend line which once broken, the prices returned to the trend line and then moved back lower. In order to regain some of the positivity, we have definitely to move first above 1645, and then after that to retest the 107 level, and on the downside, the clear support near the previous low area near almost 105.30. And after that, we have 140 or 104.70. So these are the key levels if you are trading the dollar yen. Let's just add some of the indicators to see what they're giving. So on the weekly chart, there is nothing much. We're just trading between the lower and the middle band of the Bollinger Band under the 100 and 200 hour, 100 and 200 week exponential moving average. Prices on the daily chart found resistance near the 100-day exponential moving average, now moving lower towards the 20 simple moving average. On the 4-hour chart, we can see that the bands are diverging again, and we're moving lower, and the RSI is approaching the 30 level. And on the hourly chart, you can see a move lower, a little bit of a consolidation, a flag size, and then a continuation lower. So maybe you can expect at least, if this is a move and then a flag and another move, we can expect similar size or similar proportion to the move here to happen here. The RSI is well in the oversold territory near 19 if you are using period 14. This is for the dollar yen. Moving to the Australian dollar, which is moving a little bit higher during the past hours. If you just remove everything and just highlight the weekly, you can see that we're still trading on the upside despite this doji candle here. The bias remains positive on the Australian dollar against the US dollar. Today is significant. The rally is significant today relative to the previous days. We have here a sideways move, and now we were able to break above the sideways the consolidation zone. So it's much clearer here. We have this consolidation zone almost a key resistance. Now we're trading above it once again. If we just go for adding some of the indicators, we're trading now near the upper band of the Bollinger Band. So this could mean further upside if we were able to move higher, maybe to retest the trend line combining the previous stop. So this would point to a level of 72.94 as a resistance. As a support, you just have to look for the previous supports here, which were clear near 70.87, and after that we have the previous support also of 69.20. On the upside, we can highlight, other than the 72.94, we can highlight another key level, which is almost, if you can see the trend line, the upper trend line is combining one of the previous tops reached back in 2019, early 2019. After that, we can find some resistance near a previous top, also near 73.90. So these are the key levels. I'm just gonna remove the drawing, the indicators, so it's gonna get more clear to you. So watch out for how the price will react to the top of this band. You can see that this top is almost equal to the previous the top of the trend line. If reached in the couple in the coming days this week, it could coincide with the previous top 72.94, and after that we have a previous top near 73.95. So watch out for these stops and the trend line, and on the downside 70.87, which was clear here and was previous stop before this correction lower, and after we have the 69.20, which was almost the bottom of consolidation zone inside this these 2 weeks of trading. So these are the key levels if you are trading the Australian dollar against the United States dollar. The New Zealand dollar is weaker Then the Australian dollar, we talked about the causes or the reasons behind this weakness. So if you see the weekly chart, you can see the difference. The Australian dollar following the dodgy, we had another positive move to the upside. However, the New Zealand dollar following this dodgy, we had moves lower, 2 consecutive weeks of losses. The daily chart, we can see also a series of lower lows approaching this support zone almost near 69.10. The coming support zone would come in near the previous bottom near 63.68. And on the upside, you have to watch out for any break above 66.24 in order to restore some positivity to the pair and some confidence to the buyers. And after that, we can target 67.10. So these are the key levels if you are trading the New Zealand dollar against the United States dollar. If we just add the Bollinger Bands, we're trading. We found the support near the bottom of the Bollinger Band, the lower band, and now we're retracing a little bit higher. On the daily chart, on the H4 chart, we can see a bullish engulfing candle raising all the negatives that we've seen during the past couple of candles. So watch out for how this will emerge. And also, we were able to break above the trend line that was holding the previous tops. However, we need definitely a close in order to have a little bit of a validity of this break of the trend line. Also, you can witness here consolidation between divergence between this bottom and this bottom. It is also a little bit clear. So to RSI, here were almost 30 and the price was 65.25. However, here we had the lower price of 65.15 and the RSI was higher around 35. So watch out how the price will play. The Canadian dollar is among the strongest among the commodity currencies, so dropping towards the previous lows. So if we just see here, we are still finding support near the lowest since early February. So this was a key support ahead of the massive rally that occurred during the outbreak. So watch out for any break below the previous low. If we want to set some of the key levels again, we can look for 30, 90 or 31 level. And after that, we have the bottom that was reached here inside this consolidation zone around 30.27. So these are the key levels on the downside if you are expecting a further move to the downside. And in order to see some positivity or a reversion, at least we have to go for a higher high near 32.70 ahead of trading again or clearing activity and trading above 34.60. So these are the key levels if you are trading the USD against the CAD. Let's add these indicators. We're trading near the lower lower band of the Bollinger Band. We can see that the bands converged to each other when the price moved sideways during the past couple of H4 candles. And if we just go for the weekly chart, let's start with the weekly chart. You can see how the price is trading near the 100 and 200 week exponential moving average and slightly above the lower band. On the daily chart, we can see that the price is trading between the middle band and the lower band for a while now, and now we're breaking even lower. On the H4, also similar analysis, and on the hourly chart, we're trading near the lows. So if this hour closes here, we'll have the lowest hourly close since February. So this is for the Canadian dollar, the US dollar against the Canadian dollar. Moving to gold, which rose significantly during the past 2 hours. We were trading inside this channel here. It's a very clear channel we're trading in it, so watch out for the upper side of the channel, which comes in near the 90.90 level. Currently, we're trading near the resistance zone that held here near 90.80 area, so watch out for any break because it could trigger some stronger move towards 20.07, which was a key support here and the key support on the way down. So these are the key levels on the upside if you're trading gold: 19.80, 19.90 zone, and the upper band this is almost above 1990, the upper side of the channel, and after that you have 20.07. And on the downside, watch out for any reversal below the top 1965 because it could trigger some further selling towards the previous low of 1932, 1930, and again 1908. So these are the key levels if you are trading gold. On the RSI, on the hourly chart, we're above the 70 level, and we're witnessing that the Bollinger Bands there are diverging sharply, and the prices are closing above the upper band even. So this is as a smaller analysis on the smaller time frame on the hourly chart. If you go for For the bigger analysis for what happened during the past week, so in order to have a bigger picture or a clearer picture, so the price has found support here in almost around 1860, which was the trend line combining the previous lows and also near, if we take just if we just take the RSI, the Bollinger, the Fibonacci ratios from the bottom of the move here, we can see that the market moved towards the 76.4 level before moving higher and almost near the 38%, slightly above the 38%, 38.2% level. So this is on the downside on the bigger picture if the prices moved lower. So let's just set another targets on the bigger picture. We have 1860, we have also the 1908 level, which was almost somewhere 90 here, 1910, 1980 level, which we're currently trading at, and 2016, 2007, the bottom of this. So almost between 2007 and 2016 area. So these are the key levels on a bigger time frame for gold. That's if you're trading gold. Moving to oil, nothing much is happening in oil. Still, we're trading sideways, a little bit of an improvement sideways up. This candle here just widened the Bollinger Bands a little bit, but still we're having a little of momentum. We have to we are writing some fresh fundamental drivers in order to have a break, a serious and significant break above this consolidation zone and return the volatility to oil prices. So among the key resistance and previous high, 43.67, which was all the support here, and the previous resistance near 48.78, and on the downside we have 39 level, and after that 36.80. So these are the key levels if you are trading oil. Moving to the Dow Jones. So if we were just on the Dow Jones, if you had okay, so we've been trading inside a certain tight range during the past couple of days, following these two significant moves to the upside. Later last week, we moved sideways, following a bit of mixed data and rising tensions between China and the United States. So we're missing a little bit of movers for this to continue the move higher. If we were just setting this channel earlier, so this channel that we've been trading in before the pandemic happened, we had this resistance level here, which was a reversal to this channel, and almost here we got a rejection similar to this one. So watch out for how the price will react when approaching this level near almost 28,500. Let's go deeper to the H4 chart so we can see the consolidation that's happening and detect some key levels. So you can see here this consolidation zone between 28,050 almost and 27,500, so almost 500 points range. So so watch out for any break be above or below this zone. The key support zone could come near 25,900, and on the upside we have the upper band, the line of the channel that we talked about. We talked about this line during the past week, and also this could move a little bit higher if we have some positive sentiment and positive drivers in the market. This could lead to another move towards 28,850, another pull higher. So watch out for how the price will react. We had this series of higher highs, we had the significant rally here, and now we're consolidating inside the range. So this range could be either continuation range or a reversal range. Watch out for any break above it. Watch out for any false break here also. So 28,050 and 27,500. Watch out how the price will react when going out of this zone. We have this consolidation zone. On the upper side, we have a target of around 28,850 as resistance, which was the previous support when the Dow Jones was trading near record and retracing a bit. And on the downside, we have the previous low near double bottom on the smaller time frames near 25,900. So this is all for today's session. If you have any questions, please write them down so we can answer them. I'd just like to remind you that all information, analysis, news, and opinion that were mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. And ICM doesn't provide any investment advice. So if you have any questions, please write them down. You're welcome, sir. So I'd just like to remind you that all the analysis, opinions, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. So, this is for today. If you have any questions, write them down. Okay, so there's a question: USDJPY and GBPJPY are going down while Japan is in recession and no news affect both. Yen, GBP, and okay. So if you just go, I'm gonna go to talk about the pound yen. So if we just set the chart here, you can see that the price found resistance almost near the top, combining the previous stops. So if we just go for the daily chart, it's gonna get more clear. So you can see here there's a key technical level for the pound yen pair, and especially that we are reverging a little bit back to the mean towards this trend line, and also we have this channel that we've been moving higher. So it doesn't need to, these small moves and not like major ones, they don't have like a key fundamental indicators. This move, it had a key fundamental indicator. As we know, the pound yen moves up when the risk sentiment is positive, and moves down when the risk sentiment is negative. So when we are in risk on trading, the pound yen moves higher, and when we're risk off trading, the pound yen moves lower. So this move higher was accompanied by a series of higher highs and in stocks. Also, we had some positive outcome from the United Kingdom relative to others. So this what suggested this move higher, and this reversal here is a bit more technical than what we have as fundamental factors. So it's very clear we had the three top prices touch the trend line exactly and moved lower. We are retracing currently lower. Watch out for any move back towards a key support zone that's available near 137.70 since we traded below the previous stops reached here. So this is for the pound yen. Any further questions? Okay, perfect. I just want to remind you one last time that all the opinions, news, analysis, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for today. Thank you all for joining. On Wednesday, we're going to have an educational webinar talking about GAN's trading theory. We're going to talk about his time cycles, the GAN angles, and the GAN grid. So this is all for now. Thank you all for joining again, and hopefully we can discuss further knowledge on Wednesday.